Well, stocks are charging for three major reasons, with defence stocks trading at record all-time highs. It's great to see you. Welcome to this Monday, the 5th day of May. My name's Jessica Amir, market strategist here with Mumu. You're tuned in to the Daily, and it's great to be back. Well, we're 25 days, would you believe, into the 90-day tariff pause, and no deal has been done, but stocks are charging, with the S&P 500 posting its longest winning streak in 20 years, gaining back all the losses since tariffs were announced. Now, stocks are charging for three major reasons. What are those three reasons? I'm glad you asked. Well, firstly, markets are pretty hopeful about Trump's willingness to lower tariffs at some point. He said on the weekend tariffs are so high that the world's two biggest economies are essentially stopping doing business, and he wants to lower tariffs because otherwise we would never do business, and that's what he said. Secondly, stocks are charging because US company earnings and outlooks are A-OK with the investment world. In fact, they're better than expected. 72% of companies in the S&P 500 have reported so far, and they've delivered cracking results. And thirdly, stocks are charging because economic data is now suggesting that recession fears are dying. We saw that with the US jobs data being released on Friday. So all in all, we've got a bullish narrative for stocks, and this is also fueling the Aussie share market as well as global stocks higher. But this week, we do have to question if the rally in stocks can continue. This week's catalyst could see markets become a little bit jittery. I do think that a lot does hinge on what the US central bank does say. Plus, also don't forget that 100 companies are reporting results this week. But markets will probably be a bit upset if the Fed does not signal their likelihood to cut interest rates in the future. Sure, the market is not really expecting the Fed to cut interest rates until July. But if we do see anything that could upset the apple cart, that could see markets pressured down lower. So let's have a look at the NASDAQ 100. We can see the NASDAQ 100 is indeed now in a bull market. It's up about 20% from its lows that we saw back on April 7. But this week's catalyst, as we said, could see the NASDAQ 100 test that rally. If we see this bevy of catalysts, essentially, if the Fed says that the US economy is pretty strong and the market likes what it hears, then the NASDAQ 100 could punch above its 200-day moving average. If it cracks over this, it would signify a technical bullish indicator and encourage technical buying, and that is what would push the market higher. What else are we watching this week? Well, company earnings. Earnings reports are out for 100 companies in the S&P 500, including Palantir. Now, Palantir is one of the world's largest defense companies, and Palantir shares are trading back at almost record high territory. Palantir is one of many companies reporting this week, as well as AMD, Uber, Disney, and AppLovin. But we're watching Palantir because it's a hotly traded and bought stock at Mumu, and as we said, it's trading back at record all-time high territory. Speaking about defense spending, keep an eye on the defense ETF ITA. That's also trading at its highest level in history. And it could push higher this week for three key reasons. Firstly, Trump is now requesting that the US increases national security spending from October 1 by 13% to $1.01 trillion US. Secondly, I guess you need to remember that NATO, the North Atlantic Treaty Alliance, is encouraging global economies to remember spend 2% of the income that they make as an economy and put it into defense. The third reason that I think that this ETF should be on your radar is because it's basically gapped higher, and it's a technical indicator that suggests it could continue to rally on up. What about the Aussie share market? Well, the Aussie share market has been pretty insulated from tariffs, hasn't it? But this week, our investors will weigh up what Albanese, a second term in in the hot seat means for the Aussie share market. The futures earlier were suggesting a positive open for our Monday morning following the bullish narrative in the US, while a lower US dollar is also expected to support the market higher too. But investors this week will weigh up Anthony Albanese. He's become Australia's first leader to win a back-to-back election in over 2 decades. Labor is expected to take 86 out of the 150 Parliament seats. But I think the investment world this week in Australia will go back to focusing on the basics. And what do I mean by that? Well, of course, remember that the Aussie share market is just a reflection of the local economy. And secondly, it reflects the health of the companies that make up the stock market. That said, we are hearing better than expected things from companies reporting so far. And this morning, we heard better than expected, I guess you could say, better than expected company news out of Australia's second biggest bank, Westpac. Australia's second biggest bank, Westpac, has reported profits in line with expectations. They also suggest that Australia is in a better place than most countries to absorb potential global tariff trade shocks, and that's pretty pleasing. And if you haven't been tracking Westpac, their shares have been doing pretty well. Their shares are up about 15% from the April 7 low, and they're just a whisker away from record all-time high territory, about 4% away from its record all-time high. But here's a final thought. Remember that every time 3 of the big 4 banks have fallen from their record all-time highs, I'm talking about CBA, Westpac and NAB, every time they've fallen over 10 or 15%, they've since recovered and hit record all-time high territory. And as Mark Twain said, history never repeats, but it does rhyme. And the reason that they have rallied back and hit record all-time highs is, of course, because Australia's got $4.2 trillion of superannuation that needs to be invested. There's only so many banks that you can invest in. There's plenty to consider for the daily. It's great to have your company. It's great to be back. Stay safe. Happy trading. We'll see you tomorrow.